What is an initial closing disclosure and what you need to know about it if you're buying a house or refinancing a house? If you're new to the channel, I'm a mortgage lender licensed in 48 states. My team's one of the top purchase teams in America. We send out a lot of closing disclosures, so let's talk about what it is. It's called the ICD, okay? Now look, when you first start your loan, you're gonna get your loan estimate as well as your full application package. The initial closing disclosure is the numbers again, but they're more fine-tuned. Now, here's a couple things to know. Number one, if you get the initial closing disclosure, does it mean your loan is fully signed off? No, lenders can send those out even if you've only just been through underwriting. So could I send one out without an appraisal? Yeah. Would I want to? No, not ideally, no. Could a lender send out an initial closing disclosure and then decline your loan? Yes. So it's important to know that just because you got the initial closing disclosure does not mean you're in the clear. And look, if you're working with me, you've already been fully underwritten, so there's not drama, but sometimes people are working with lenders and they haven't been underwritten fully before, and there is drama. So it's just important for you to know that just because you got that does not mean that your loan is done. Now, the next thing that I think is really confusing for people is they're like, okay, this says closing disclosure, so this must be the money that I bring into closing. No, not necessarily. So here's the thing. So we didn't used to have these initial closing disclosures. This is something that came out as a result of Dodd-Frank. And what had been happening is that lenders would tell people, oh, hey, yeah, I'm gonna get you 2%. It's gonna be great. There's no lender fees. It's awesome. And the person would go, oh, but my loan estimate doesn't have it locked. Yeah, I already locked it. It's good. That's just old. Just sign it. You're good. And then people would get to the closing table and the rate would be 8% and $10,000 in fees. And they were like, what? But they were at the table. They were hostage, right? A seller's not gonna extend your closing because your lender ripped you off. So the government goes, okay, how can we stop this BS shenanigans? And they created the initial closing disclosure. So can a lender send an initial closing disclosure without you being locked? No. Okay, you do have to be locked. So what I always tell people is, look, the initial closing disclosure is a really good thing to look at because you want to look at the rate, you want to look at the fees because that is what the lender's really charging you. If you've been working with a lender where you didn't lock or they're like, oh, we'll lock closer to closing and you're like, I don't really know. The initial closing disclosure is going to have that rate and the fees the lender's charging you. And I bring this up because it's at that point that I usually get calls from people working with other lenders. And it's because what they see on that form is not what they were promised. You want to pay attention to it. I can't stress it enough. Looking at the loan estimate is critical, but if the loan estimate is not locked, in many cases, the only time you're going to see what you're really paying in rates and fees is that initial closing disclosure. So here's the deal. You have to sign the initial closing disclosure at least 3 business days before you sign your final loan docs. Okay, so let's say you get the initial closing disclosure on Wednesday. You're supposed to close the next Wednesday. You don't sign it till the following Tuesday. You're not closing, right? There has to be 3 business days from when you sign the initial closing disclosure and you sign your docs. It's designed that way so that if a lender's trying to rip you off, it puts this pause period for you to go back to them and say, hey, this isn't what you promised, or to talk to another lender to see if you're getting ripped off. So it's really important that you recognize that because I think that people are like, oh, it's my final numbers. Sometimes we'll have a client where they wire that money to escrow or they get a cashier's check and we're like, no, wait. And you're like, well, wait, when do I get the final numbers? Because look, I think that this is one of the most frustrating parts of buying a house because I know as a buyer, I want to know, like, how much is the check? Just tell me how much the check is. Let me know. And it's not till the very end that you get that check amount. So here's the deal. You've got your initial loan estimate, which has a good estimate of numbers. You've got the initial closing disclosure, which is going to have that rate lock. It's going to have, lender fees, and it's going to have a good estimate of numbers. What can change is the initial closing disclosure, escrow or the attorneys haven't put in stuff like necessarily there could be an HOA transfer fee. The taxes won't be prorated exactly. What that means is, like, for instance, when you're buying a house, sometimes the seller is going to be responsible for some taxes because you're going to be paying that bill, but they have to pay a portion, and they're going to fine tune those numbers. So the biggest stuff where I'll see changes is sometimes in new construction. What we'll see is we get information from title and escrow, but we don't get all the numbers. So we do our best with the initial closing disclosure to be as accurate as possible. Then we get loan docs out, and then we hear, oh, there's this, there's that, there's this, which are all builder fees or some level of nonsense that we didn't have till then. So it's pretty rare, but the key is this. The initial closing disclosure is not your final numbers. You get your final numbers on the final closing disclosure, which is what you get once the loan documents have been sent to title and either escrow and the funder or the attorney and the funders have gone back and forth to fine tune those numbers. Generally, it's a day before you're signing, okay? That's when you get the final. And should you look at that? Yes. Every single time you get numbers, look at it. And, with the interest rate and fees, like, oh my gosh, you need to look on that at the initial closing disclosure to make sure you didn't get bait and switched. But at the final, there could be a mistake. You could be like, oh, there's a pest report on here, but I actually paid it. Here's the receipt. Or actually, my real estate agent said they were going to cover that. There's stuff that could change. So you want to make sure you're reviewing it. And sometimes people go, oh, were they trying to rip me off? No, a lot of times it's just human error. That's why you always want to be taking a look at it to see if you see any issues with it. So look, I hope this video was helpful. I just wanted to do a quick about the initial closing disclosure. So when you get that, yes, review it. If everything looks good, sign it, because that starts the clock so you can sign your final loan docs. Make sure with the lender that what you're getting for rate and fee is what you expected. And don't wire that money to closing. You don't want to do any money to closing until you get the final closing disclosure, which happens once loan docs are out and the funder and escrow and title or the attorney and the funder have gone back and forth. So I hope this video was helpful. Yes, I agree with you. I wish that we could have that final number way quicker. But at this point, I have not found a way to get it quicker, and I don't know anyone that has. So questions, comments, as always, feel free to reach out. If you want to get on the calendar, hop on the calendar. I've got Sandy. I've got Sandy, Alyssa, and Linda all day. They're there to answer your questions. So take advantage of their experience. Thanks for watching.